All right, good afternoon, everyone. Welcome to today's webcast titled How to Analyze Your Stocks. My name is Brian D'Amico. I'm the Manager of Educational Services here at VectorVest. It's my pleasure to be the host and moderator today for the webcast. Today's instructor is Todd Schaefer, who is the Manager of Research here at VectorVest, and he's been with VectorVest for 7 years and has taught seminars on stock and option trading in the U.S. and overseas. Today he'll be teaching us the very first steps that you should be taking to becoming a successful investor. Now what we'll do is at the end of the webcast, we'll open it up for questions. Of course, you could chat in your questions at any time throughout the webcast, and you should see a little box, as you can see with the big yellow arrows there on your screen. There's a little box that says enter a question for staff. At any time throughout the webcast, feel free to put in a question there. Todd will answer them as he can throughout the webcast. So type them in there, and then we will dedicate some time at the end where we can go through as many questions as we can as time allows. Now, if that question box does minimize, which sometimes it does, you'll see a little thing that appears just like this in the upper corner of your screen. Just go ahead and click on that little orange arrow, and you'll be able to bring back the question panel so you can type in questions. And then, like I said, we'll try to get to as many questions as we can at the end. It's now my pleasure, once again, to welcome Todd Schaefer. Welcome, Todd. Thanks for being here today.
Thank you, Brian. Thank you for getting us rolling here today. Thank you, folks, for attending this webinar. We're packed full of a lot of information here for you today, very practical usage of it. So I think you'll really enjoy this lesson one on getting started with the VectorVest system here, starting with analyzing our stocks. Well, we're brisk and bright and sunny here in North Carolina. I trust it's brisk wherever you are. Maybe not so bright, but we got a little thaw today. We got over freezing, so we're feeling like it's Florida. I moved away from Chicago and Michigan 15 years ago to get away from this stuff. But here I am anyway, a great day to be inside, trading the markets and learning more about how to do that more effectively. So getting started in our lesson for today, this is all about taking the first steps to become a successful investor, and by implication there are several steps then that we're going to want to cover before we just go jumping off into the market. We're going to cover the first steps today, which are going to focus on evaluating stocks individually, both stocks that you may be already trading and familiar with, but also how to analyze a new stock that maybe you here in the dentist chair, or your buddy's talking in the locker room after a game or something, right? Or something off of the television. You'll be able to analyze all those stocks and be able to understand fully how those companies are performing and whether or not that's a stock that's a candidate for you. VectorVest has been in business now for over 25 years, so we think we have something in the mix that's right. But whenever we're analyzing stocks, you have to take a perspective. And so VectorVest takes a very prudent perspective, and we say at that foundational level, if you're going to trade a stock, then you should know what it's really worth, how safe it is, and then when should you be buying, selling it, or holding it. These three questions form the core of our stock analysis system. Another way of saying what is the stock really worth is what's its value. And then, of course, is the current market price more or less? Is it over or undervalued by the market? How safe is it? How much risk am I taking on? And then when should I be buying, selling, and holding it? Well, we believe in buying rising stocks and holding rising stocks and selling them when they start falling. VectorVest analyzes, sorts, ranks, and graphs over 8,000 stocks in the U.S. database every day for value, safety, and timing, those three core questions that we were trying to analyze on each and every stock. In addition to that rating, we also give a buy, sell, or hold rating to each stock every day, all 8,000 of them. All of these ratings, all of this analysis, including the buy, sell, or hold recommendations, are all driven mechanically or mathematically. There is no guru, there is nobody's intuition or gut feel going into any of this analysis. All of this analysis is data driven. That's important because a lot of what we're trying to do is separate out all that fog and blizzard of information that's out there, a lot of it opinion, some of it good, some of it bad. We're trying to get back to the facts, the roots, and see what the truth is about these individual stocks, and that truth is born in the data. Beyond the stocks themselves, VectorVest has found, and we believe, that the market trend has more, or I'd say more, impact on your trading success than the stock selection does. So we're going to focus on stock selection, stock analysis in this course. But remember that we're going to do this in the context of we want to identify rising market conditions to be buying stocks and selling stocks in falling market conditions, or at least defending our positions, being protective. So this whole concept of we want to buy rising stocks in rising markets, and we want to favor safe stocks that are undervalued. So with those kind of core principles forming our frame of reference, if you will, let's move ahead and start talking then about the VectorVest system and how it works to help us identify these conditions. Here are some of the 3 bullet points, if you will, of the things that we're going to learn today in this presentation. First, we're going to learn how to analyze any stock. This will be through we call this the thumbnail analysis. This will be through that lens of the 3 questions, if you will. Then we're going to learn, once we've analyzed those stocks, how to manage a group of stocks, our current portfolio if you want, or a fictitious one to practice. And finally, we're going to give you 4 tips to determine when to sell a stock, because most of us struggle, at least in my experience with dealing with many people over these past years, is the buying decision isn't as hard as the selling decision. Because when we enter the position, we've done our analysis and we're all full of positive emotions of hope and grandeur. But when it comes to the selling side, it's more painful because we're selling often because of a lack of success. So we're going to look at some tips of when to sell, because that's just as important as knowing when to buy. With this basic kind of fundamental knowledge and technique, then you'll be able to reinforce a good portfolio. If you already are experiencing success, these techniques should help you improve your performance. Of course, if you're kind of struggling and just moving sideways, hopefully we'll revitalize a portfolio that has started to stumble or lacks that forward movement. And then finally, if you have a broken portfolio, we'll now have a systematic way that we can turn around that losing portfolio, that broken portfolio, heal it, and get it moving in the right direction. So if that sounds like something you're interested in doing today, then you're in the right place, because that's where we're going to focus today. So let's do this. Let's move into the program and let's get started with this whole VectorVest system of analysis. So if I get my keys right here, I'll move us into the VectorVest program. This is our home page. And right on the home page, we have all of our market timing system information, which is our first consideration if we were actually going to go trade. We're going to kind of leapfrog past market timing today and market trend and go right into stock analysis, which means we're going to go into our stock viewer. So I'm going to click on our viewers tab, and I'm going to open the stock viewer. The stock viewer is simply a giant spreadsheet of all 8,000 stocks we have in our database, 8,100 currently. And we have, if I scroll to the right, there's 36 indicators and parameters. They're kind of in that base spreadsheet, if you will, including industry and sector information. We're going to focus on our core system of analysis today, which is really just this front section of the spreadsheet. We're displaying the top 10 graphs here. You can go anywhere up to 100, or actually all of them, although in real time we don't feed all data at all 100 at once. But here we're looking at just the top 30 of those 8,100 stocks, and we're sorting them. This is not just a random list. We brought to the top of the list the stocks that have the best scores of value, safety, and timing, or VST, which is our combining of value, safety, and timing. So overall, we brought to the top of this list, and you'll see this in any generic list of stocks in the VectorVest system. We brought to the top of the list the stocks that have the best combination of the three. And so we see the Universal Insurance, UVE, is our top rated stock in the database today as of the close. We begin, and we're just kind of going to move through the columns here and go through this system of analysis. We're going to begin with some of that information that you can get off of just any ticker, right? You've got the company name and its symbol. The exchange here tells you that with the X, there are options available for this stock. Its closing price was $13.11, and that represented a drop of 28 cents or 2.09% from yesterday's close. And next we come to valuation, which begins now the VectorVest proprietary analysis, which is in this first little section here of the next 4 indicators. So let's first talk about value. Now, I'm going to define each of these for you, but if you're a new user here, an easy way to figure this out is if I right-click on any stock and I go to the full stock analysis, I left-clicked on that. With any luck, there it is. There is a full stock analysis report for every stock in the database. And we start out with a little summary of its valuation, the stocks chart versus its industry chart. Next we come to the detailed analysis with a company description. And then we come to each of the indicators in the spreadsheet. And so you can see we start with value. And value is a measure of a stock's current worth. It's computed from forecasted earnings per share, forecasted earnings growth, profitability, interest, and inflation rates. In other words, we're trying to give you a sense for what's included in the analysis of that value number that we come up with. The idea here is if you're interested in the formulas, then we get you pretty close by reading the little green book from Dr. DeLito's Stock Strategies and Common Sense. But this gives you kind of an overview, a 10,000-foot view, if you will, of what's included in that analysis. Value increases when earnings growth rate, and profitability increase, and when interest and inflation rates decrease. VectorVest obviously would advocate the purchase of undervalued stocks. At some point in time, a stock's price and value will always converge. And so we have that kind of glossary, if you will, in the stock analysis report. I would encourage you to go and just print one out, leave it on your desktop as you get used to the VectorVest indicators and our analysis. Closing that out, though, we come back here and we see that in that VectorVest system, then we valued Universal at $21.06. Currently, it's priced at $13.11. So I ask you, hypothetically here, is that good or bad? Well, hopefully you're saying that's good. I'm paying $13 for something that's really worth $21. Recognize that that value number is really the valuation for right now. It's a slice in time valuation based on the current data points that were described in that paragraph that we just read. The second question is, well, if that price were overvalued, would you still consider buying that stock? In fact, you'll find that sometimes VectorVest gives buy ratings to overvalued stocks. Here's one down here, Liberator Medical. At $465 is only valued at $322, but it still has a buy rating. How can that be? As we go through some of these indicators, it'll become more clear, but just generally we're saying that there are times when we would advocate paying a premium, if you will, to get into a strong company. But what we'll want to be able to see is that there is a rationale behind that. In other words, if I'm going to pay a premium to be in a company that has some very strong fundamentals, that's very different from paying a premium to be in a stock that has very weak fundamentals but is currently in favor. One is a much more risky trader's kind of play versus a position swing or investor's approach. So far we've determined that Universal Insurance is undervalued. And next we come to a series of indicators that are all on a 0 to 2 scale. And this is something that VectorVest does consistently throughout the program. VectorVest is about imparting information, not just pushing more data at you. You know, one of the things I do in my job here is look at a lot of our competitors' products, and they're very good broadly. You know, these market tools are very good at pushing more data at you. But if that data doesn't inform those three questions about, well, what's the thing really worth, and how safe is it, and when should I buy it, did it really help you? You can get to the end of that analysis and go, wow, I don't really know whether I should trade this any more than when I started. All I know is that, okay, earnings were up over the last 3 quarters, but was it up over 6 months ago? I don't remember. So what the VectorVest system here is doing is giving us information, and to make that easy to understand, we use this convention where we use a 0 to 2 scale. So 1 is neutral, and so it is with our RVRS, RT, and VST indicators. So if 1 is neutral, then 0 is as low as it goes, and 2 is as high as it goes. 1 is neutral. So we know then that these scores here for RVRS and RT are all favorable because they're above 1. Very simple. Well, let's talk about what these indicators are. RV is relative value. This is a different way of looking at that valuation question. Relative value is now trying to look forward, saying, well, based on primarily earnings growth, what other factors, what's the upside potential of the stock relative to its equivalent safe investment of a AAA corporate bond? The AAA corporate bond is our benchmark. Would you rather be, in other words, a lender to Universal Insurance through the bond, or would you rather be an owner by virtue of participating in the stock? RV tells us that you're better off in the stock. In fact, this stock should outperform a AAA corporate bond by 69% in the next 1 to 3 years. Not the Universal Insurance bond, but the average AAA corporate bond. So that means that in that next 1 to 3 year time period, you have some pretty good upside potential in Universal Insurance. Next, we come to RS, or relative safety, and this is answering the question of, well, okay, what's it worth, what's that upside potential, but how much risk am I going to take, or how much risk am I going to assume to trade that stock? Now, there are a lot of ways of analyzing risk, right? The way we're looking at risk is we're looking for the consistency and predictability of a company's financial performance. We look at that, their debt-to-equity ratio, their sales volume, how long have they been in business, how volatile is their price, and, of course, many other factors. But again, we're on that 0 to 2 scale, and so we're going to favor stocks that have a safety score above 1. So far we answered that question of what's it worth, how safe is it, and those indicators, by the way, comprise our fundamental analysis of that stock. Our next indicator, relative timing, is purely a technical indicator. And what relative timing is trying to do is show us the short-term price trend of that stock. It's again on that 0 to 2 scale, so if it was a score of 1, it would be kind of moving sideways, not, a little momentum. If it's above 1, then it's in an uptrend. The closer it gets to 2, the stronger the uptrend. If it's below 1, it's in a downtrend. The closer to 0, the stronger the downtrend. RT is computed by analyzing the direction, magnitude, and dynamics of a stock's price movement. And we do it over multiple time frames, over 1 day, 1 week, a quarter, and 1 year. And then we weight the quarterly movement. This is kind of a momentum concept of that stocks that are in uptrends, that are in strong trends, tend to continue in those trends. And of course, as those trends start to dissipate, we'll see it in the performance of the relative timing. These 3 indicators are then combined into our master indicator called VST, value, safety, and timing. And they're combined mathematically by squaring I won't even go into that. We combine them mathematically. The important part is that the VST score then gives us an apples-to-apples basis to compare stocks with very different prices, that are in very different industries. And unlike things like PE ratio, it allows us then to compare these guys on an even basis so that we can see on balance which stocks have the best combination of those attributes. So VST then is kind of our master indicator. And that's why we're sorting all of our stock lists by VST. Coming to the right, we then have our recommendation column. I'm going to skip over the recommendation column here for a minute because I won't go through the rules until you understand all the component pieces. Let's keep moving to the right, and I have a column called stop. VectorVest calculates a stop price for every stock in the database every day. That stop price is calculated by first starting with a 13-week moving average of the stock price. We then make an adjustment to that moving average price based on the fundamental strength of the stock. So stocks that have strong fundamentals will actually lower the stop price to keep you in the stock longer. Conversely, if a stock has very weak fundamentals, we'll tighten the stop closer to price to get you out, to be more defensive and get you out more quickly. That's our stop price. Now, we like to say you can use that stop price as a gospel or a guide. If a stock gets on a run, you can have a differential between current price and stop price of 15–20%. So maybe it doesn't work so well for a trader who's got very volatile issues, very volatile stocks. But it works very well with more trending kinds of stocks that have a little bit less volatility. So for that reason, we use it as a gospel or guide. What happens, though, is when price falls below that stop price, no matter what the other conditions are, we will give it a sell rating or sell recommendation. I like to say the recommendation is more a rating. It's an adjective, not a verb. We're not telling you to go out and buy every stock that's in the database that has a buy rating. It means that it's met these rules. And the first rule for a sell recommendation is one and only one, is that the price has fallen below its stop price. Once the price comes above the stop price, it will have a hold rating. For a stock to get a buy rating, it needs to meet 4 rules, and you'll see the genius of this here in a second. So we know, first of all, the first rule is that the price needs to be above that stop price. Rule number 1. Rule number 2 is that that price needs to be pulling away from the stop price. In other words, the price is accelerating faster than that 13-week moving average. The third rule is that the stock has to have a VST score above 1. What that does for me is, since there are 3 components of the VST score, mathematically I probably have 2 of the 3 above 1 to have a VST score above 1. So I've got a stock that has some fundamental strength, more than likely in either RV or RS. The fourth rule then finally is that RT has to be above 1. The stock has to be in an uptrend. Those 4 rules need to be in place for us to give a buy rating to any stock. And so when I see a buy rating, I know that that means that the stock has fundamental strength, it's in an uptrend, the price is currently above its stop price and pulling away from it. But remember, that's what I know. But that's all I know. It didn't tell me whether or not it was overvalued. It didn't tell me what the PE ratio was. It didn't tell me whether or not their earnings are growing or falling, or whether they're even profitable, right? So we want to understand the tool and understand that analysis. The last 2 components, and that really comprises our thumbnail analysis, but I like to include the next 2 columns because for me they're very important. The next is growth. This is the earnings growth rate annualized, and the column after that is the earnings per share. So when I do the analysis of universal insurance, it just took me, what, a good 20 minutes to talk us through this. Let's apply it to universal insurance as if we had seen it for the first time. I come to universal insurance. It's priced at $13. It's valued at $21. Favorable or unfavorable? Favorable. Got a good RV score, a good RS score, and it's in a nice strong uptrend. Has a VST score of 1.57. They are currently rated a buy. They're growing their earnings at 35% a year, and they're currently earning $1.74 per share. And the last piece of the puzzle, they are in an industry, they're in the property casual insurance industry that is currently in an uptrend. That thumbnail analysis just took me, and I talked my way through it, probably took me about 20 or 30 seconds. That core analysis is what I used to as a very prudent kind of investor. Used to do over a series of weeks to months back in the pre-computer days when I had to contact the company and get their financial statements. As you practice that technique, the numbers will start to speak to you. It'll become, you'll be able to visualize the chart of this stock, and you'll be able to visualize how they're doing without really even thinking about it. Let's look at Jazz Pharmaceutical. Currently priced at $137.82, valued at $187, favorable. Good RV, good RS. They're in a nice strong uptrend. They're buy rated. They currently earn $7.87 a share, and they're growing that at 26% a year. If I click on them, I'll see that they're in the ethical drug industry, which is in a nice strong uptrend also. That core analysis then becomes very simple to do. So now we're going to have some fun with this. We're going to apply this system of core analysis, if you will, to stocks that you guys choose. So let me first do this. Going back to my Viewers tab, and I'm going to open up a new watch list. We'll click on My Watch Lists. I'll click New. And let's just call this Webinar. And a watch list is simply, your own personal stock viewer is how I like to say it. Notice I have the same column headings that I had in the stock viewer. So what I need for you guys to do is, and some of you have been here before, just give me some symbols so that I can add them to our portfolio. And we're just going to try to populate it with 10 or so random stocks. So I've got BAC, just type them in the comment box, ULHC. Oh, okay, we didn't find that one. Let's go to T, MU, WLT, Gale, PCLN, Oracle, Apple. Everybody always wants Apple. Bell. All caps. I like that. Thank you. It makes it easier to read. Caterpillar. And let's see how many I've got so far. Oh, 11. We went bonus round. And I'm going to stack the game with one for myself because I want to put somebody in there who's stinky. You guys picked some good stocks. I want to pick a stinky stock. All right. And it's GameStop. So anybody who's been trading GameStop, they're struggling here a little bit lately. I'll move that over so you can see the names. And here is our watch list of stocks. And we're going to pretend that this is our portfolio. This is there's two analogies I like to make with this. One is this is a baseball team, and each of these stocks is a player on the team. And right now I'm winning games, so I'm happy, right? So your portfolio is making money. But what a lot of times we don't realize, because we don't analyze the individual stocks within the portfolio, is I can have a player who's really not helping the team, if you will. In other words, a stock that's underperforming, that's actually pulling down my performance, but because overall I'm still making gains, I'm blissfully ignorant. The other analogy I like is one of a garden where I've got a weed, or several weeds perhaps, in this garden that are choking out the performance of my garden, and if I don't tend them, what happens? They're going to choke out the garden more and more, and I'll notice it when the performance of the garden starts falling overall. In this watch list, then, we have our portfolio. And the question I would ask is, okay, if these were my holdings, once I've bought these stocks, once I've taken my positions, what's the most important thing to me as an investor trader? Anyone? Bueller? Type it in. Take a guess. What do I care most about with these stocks that I own them, now that I own them? Most important thing? More than preserve capital, Dan. What do I want to do? More than not losing money, I want them to make money, right? There you go, Jack's got it. The most important thing for me is that these members of my baseball team produce, that the portfolio rises in value. In fact, if they're not rising in value, then they're either moving sideways or they're falling in value, and the first rule of don't lose money is being broken. In my analysis then of the members of my baseball team, I'm going to resort this list, and with what I've just told you about our analysis, let's sort that list by relative timing. This will bring to the top of the list the stocks in the strongest uptrend, but who's at the bottom of the list? The stocks that are in the strongest downtrend. And those, my friends, are the weeds in the garden. The guys who may have a great story but aren't producing. And so our point here is I need to identify them first of all and then decide what I'm going to do with them secondly. So if I was going to come in here and look at my troublemakers, if you will, interesting here, Galena, priced at $6.24, valued at 29 cents. So that here we have a relatively speculative play, a stock that has very weak fundamentals but a strong uptrend, right? And we currently have them a hold. They're currently losing 35 cents a share and increasing those losses at 5% a year. So that's not kind of an investment stock, but did you see how easy that analysis was? Applying it to the stock at the bottom who's actually in a downtrend, so that's a more critical thing to know. I've got Walter Energy, GameStop, and AT&T are all in downtrends. Instead of just washing these guys wholesale out of the portfolio and churning the portfolio perhaps needlessly, I want to analyze the stocks themselves in the current condition and ask myself whether or not I need to lose them, cut my losses, or whether or not I feel they might come back and that I need to set a new line in the sand, if you will. Let's start with Walter Energy. Currently priced at $14.58, valued at $14. We say within plus or minus 10% here, you're fairly valued. So let's say that Walter Energy's fairly or fully valued. But they have weak RV and RS scores. They also are in currently a downtrend. So weak fundamentals, currently in a downtrend. We rate them a hold, but they're currently losing $1.65 per share and increasing that loss at 9% a year. Not the picture that we wanted to hear. And again, that analysis, just that fast, I've already got a picture in my mind of what the graph for Walter Energy is going to look like. And I also have the same thing going on with GameStop, my ringer, if you will. Priced at 45, valued at 58. They have good fundamentals, right? GameStop has good fundamentals. They're both favorable above 1, but they're in a downtrend. Well, what's the stupid market doing? The market's got it wrong. These guys should be going up. Well, you can cry that to your computer all day long. The market doesn't care, right? So we see that often. If you have a company that you like, but it's not currently in favor, don't sit there and take it on the chin. Take defensive measures, perhaps sell it out, and re-enter it when it starts its uptrend, even though they're currently earning $3.32 a share, growing those earnings at 4% a year. This approach then lets you see what's going on internally, if you will, with the stocks and what's going on with the current price action. But of course, all indicators lag price, so we want to look at a graph. We always want to look at a graph. Before I do that, this bottom row is the average of all the stocks that are currently in this watch list. So we can tell a lot about what kinds of stocks we trade based on those average values. Generally, the average RT for the portfolio is 1.2. So generally, the portfolio is in an uptrend currently, even though we have some of these laggards that are hurting us a little bit. What we'll show you after we look at the graphs is simply by cutting out some of the dead wood, we can improve this average score. And if we replace dead wood with new plants that have a score better than the average, we can improve our portfolio performance. So let's take a look at a graph for Walter Energy, because we've identified that it has some weak fundamentals, it's in a downtrend, and we need to make a decision whether or not to cut it from the team or weed it from the garden. So we're going to take a look at a graph. Easiest way is to come to the graph selected button here and take a look. And let's make sure we're on the VectorVest layout here. What we have is the price action of Walter Energy. This is a 40-day moving average of that price. And on the bottom we have our RT indicator, our relative timing indicator. Let's first talk about what we favor. I'm going to change our graph layout to VectorVest Simple, which includes a graph of our earnings performance. And because earnings drives that engine of price, what we favor is nice, smooth price action from bottom left to upper right, mirrored with nice earnings performance, bottom left to upper right. The smoother that line, the better. The less volatility, the better. So that's the idealized thing we're looking for. Obviously, Walter Energy is not moving smoothly bottom left to upper right. But I do notice that recently, though, we are working our way up off the bottom, although with some hiccups in place. Right? So my question then becomes is, well, do I need to cut my losses, or should I perhaps set a line in the sand that says, you know what, no more. If it goes beyond this, I'm done. Well, the thing we want to think about is price trend. Remember, we're looking for stocks whose price is rising, and by definition, an uptrend is a series of higher highs and higher lows. A downtrend is a series of lower highs and lower lows. And in the absence of either of those, then you have something that's moving sideways. So in the short term, I do have a series of higher highs and higher lows. So in the case of Walter Energy, I may, instead of selling it because I've already ridden it this far, perhaps I would set something like a stop loss that says, if it goes below that previous low, then by definition, the uptrend has ended and it's time for me to get out. I'm going to give you here in a second 4 things like that to look for that can help you make that decision of when it's time to get out. Okay? So that was Walter Energy. Let's take a look at GameStop, and hopefully this graph, because this is my cherry-picked example, hopefully this graph is more like something you would experience. Okay, so here we are, GameStop. It was in a nice uptrend. Hopefully you entered this, back here, back when it was buy rated. We had a buy rating on GameStop back here. Right, it became sell rated up here, so hopefully you had a nice run in here during that time frame. But let's talk about a little bit about, first of all, what would we do with it now? And then secondly, what are some of the things that would have been early warning flags, if you will, to help us come to that decision? Again, we have the price, the moving average, and the relative timing. A lot of times, if you're new to reading stock charts, we talked about an uptrend as a series of higher highs and higher lows. If you're new to stock chart reading, often it's easier to just look at the slope, and if I take price off, look at the slope of the moving average, and that'll tell you where you're trending. And of course, you can look at longer or shorter term moving averages to do that. But just generally, moving averages are very helpful at identifying for you the trend of that stock. On this basis, obviously, GameStop is now currently in a downtrend. Just looking at price action, I can see that, yeah, it broke its trend. It established this nice trend, and it gapped down below that trend and has now established a lower low and a lower high. And in fact, it just went below that low again. Right? So this is a case where, based on price action, I might zoom in here and say, you know what, if it goes below yesterday's low, then I'm done, because it's establishing new lows. It's going the exact wrong way. All right? But there are some things that kind of led up to us understanding that the GameStop run was ending, if you will. So let's talk about that a little bit. First of all, let me clean this up a little. When we bought into GameStop, and it doesn't matter where you are, if I looked at the chart and I had this nice smooth price action going on, and all of a sudden I have a lot of volatility introduced, just that change in price behavior is a yellow flag. Right? Just the additional volatility in the change of the price behavior should be a yellow flag to me. Secondly, then, I'm looking for breaks in that trend where the series of higher highs and higher lows breaks down. Another classic warning for me is when that price broke below that trend line. Okay. The other thing is that 40-day moving average is adjustable, and I might adjust it on this particular stock a little bit deeper into maybe a 50. But even as the 40, as the price came down, it repeatedly touches that line and tests that line. When it pushes through, breaks through, and continues downward, that's called follow through. That's another great reason to become bearish on the stock. Right? So these are some of the things that we were seeing happen. Looking at our friend RT, RT is very intelligent, if you will, in that momentum indicators are the only forward-looking indicators. And I can see that even though price was still rising, even though, and let's draw a line here, even though price was still going up, I saw that relative timing was falling. We call that a bearish divergence. This uptrend was losing steam, losing enthusiasm, if you will. And this is often a precursor to the actual crossover, where RT went from uptrend to downtrend and would have been a great exit signal for GameStop. This precursor kind of gets you prepared that, hey, it's time to stop adding into this thing. Boy, do I have some big profits. Start asking some of those questions. Do I need to get defensive here as I approach my, solid evidence that it's time to leave? Finally, and remember we talked about our sell rating or our sell recommendation as that line in the sand. If you hadn't figured it out by that time, here's the VectorVest sell rating. So as soon as that stock got the sell rating in your portfolio, we'd want you to be opening up this stock graph and saying, wow, okay, well, here I am. What am I going to do next? Right? You would see this breakdown in the price action. At this point, you might say, well, geez, okay. Zoom in here. Right, I've bottomed here. Maybe I set this threshold as support, and if it breaks through that, then I'm out. As it came back here a little bit, I could adjust that support level up, and maybe would have stopped out here. Right, so those are some of the things that you can do. Those 4 early warning signals, if you will, that can help you identify when a stock's uptrend is breaking down. And of course, we favor stocks that are in the uptrends when you enter them to begin with. It's that momentum play. Stocks that have good fundamentals, that are nice uptrends, tend to continue rising. And of course, GameStop went for over a year. Right? So to review those real quickly, because I'm sure Brian's taken about 500 questions about what were those for again? We look for price action. Was number 1, changes in volatility and a breakdown of trend. The 40-day moving average, or just moving average crossovers in general. Right? I could put perhaps, price is a 1-day moving average, but I could put maybe a 20-day on here, or a 5 and a 10. Of course, the shorter the look-back period, the more volatile that signal is. The third was RT, looking for divergences and ultimately the crossover from above to below 1. And finally, the fourth thing, the VectorVest sell recommendation. We say the sell recommendation is gospel, or you can use it as gospel or guide, but the last thing I want you to do is ignore sell rating. If it has a sell rating, you have to look at the position and decide whether or not you're going to hold it, defend it, or sell it. The best way to avoid a big loss is by getting it when it's a small one, right? The idea here is, though, that we don't want to be so oversensitive that we truncate what was or could be a long uptrend. All right, let's go back. So we've decided we're going to sell GameStop, but we're going to give Walter Energy a pass here and see if it can maintain its nascent uptrend. So notice here my RVRS and RT scores, and when I sell GameStop, right, my RV and RS stayed about the same. RT went up quite a bit. But the question then is, okay, I've weeded the garden. I'm taking the weed out. What do I replace it with? Well, hopefully you can see that the place we'd expect you to, or want you to go looking, let's start at the stock viewer with the top VST stocks, because these are the stocks that have the best combination of value, safety, and timing. This is a great place to start. Look at the chart of the top 10 or 15 or so, and look for those nice smooth price patterns that have nice smooth earnings patterns behind them, that have good fundamentals. They're making money, and they're in industries that are rising, because birds of a feather flock together. That information doesn't take long at all. It becomes very intuitive, and you can manage a portfolio effectively in just minutes a night, because VectorVest is bringing to you the information you need to be effective. With that, let's jump back into the slides. So hopefully today you learned how to analyze any stock. And if you find a stock that's not in the database, just let us know and we can add it. You've learned how you can manage your stocks using the watch list and using the VectorVest system of analysis to analyze them and to watch their performance in graphs. And we've given you 4 tips to help you determine when that price trend is breaking down and that it's time to consider selling or protecting the position. Our next lesson will then be to take move the big piece, if you will, the market timing aspect of it, of how can I identify when the market is trending upward, because that's the best time to be buying stocks. You can be a great stock picker. You'll pick some great companies, but if the market is falling, you're setting yourself up for potential failure. In fact, back in the throes of 2008, nothing had a buy rating except for contra ETFs in our system. So, even good stocks fall in falling markets. The idea is put the wind at your back, put the odds in your favor. Let's identify rising market periods to buy these best top VST kinds of stocks. So now we'll move on to the Q&A section here. I'm sure Brian has been diligently keeping a list for us here to go with. And so hopefully I can answer some of your questions and clear up your understandings.
Well, I think you did a really good job there, Todd, of answering questions as we went along. It's kind of like a preemptive answering of questions.
It was a preemptive strike, Brian. Yeah. That's right. It's my strategy.
Yep. There was actually, I'm trying to look for it here. There it is. I just wanted to start off with this. John actually chatted in. He said, as a relative newbie, this is the best description I've heard as to how to use the system. And he said, thanks for that.
Good. You're very welcome. That's it's actually I'll speak for the majority of us in the education department in particular. That's what keeps us going. It's helping people have the aha moment.
All right.
Very rewarding. So thank you.
Well, I promised a few people that I would ask you some questions at the end, and then I'll ask those, and I'll get to some others as they're coming in right now. So David asks, if the value of a stock is less than the current price, why
Okay.
would the RV be above 1?
If the value is
Uh,
below price, so we're
or
over.
he might talk about the other way around. Maybe if the stock is overvalued, why would the RV be above 1? I
Yeah,
think that.
yep. So remember, let me just back up and say it this way. Value is looking at a slice in time of this moment. As of this moment, with a given interest and inflation rate environment that we're in, with the current financial performance of the company, this is as an investment instrument, this is what the stock is worth. What that doesn't say, though, is how well managed is this company, how well are they taking their current resources and improving them over time. And so relative value takes a different look at that and says, okay, based in large part, there are other indicators in there as well, and some of it's proprietary, but generally, with the way they're growing their earnings, right, and rolling their earnings back into the company. So with that earnings growth, this is the upside potential looking forward. So what's the future valuation of this company? Well, nobody knows that necessarily, right? But we can say that we can project that forward by saying, well, geez, if they're growing their earnings at 35% a year and at the current earnings rate of $1.74, they're worth 21, then that future valuation is X, right? So the RV valuation, instead of assigning it a number, we say, well, relative to a AAA corporate bond, this is how we expect that growth to be relative to that bond. Because ultimately, as investors, that's the question we're answering. This is not a target price for where we think the stock is going. This is a upside potential question. So hopefully that helps.
All right. I got a few more that I promised to get back to. You were talking about divergences when you're on the graph, and Raj wanted to know, is there a time frame that you look at for the divergence?
No. I look at, in general, in technical analysis, we want to look at multiple time frames. So if I look at that graph, and what was that, GameStop, right? Right, and here we saw this divergence going on with price. Well, you can look in the short term, or you can look in the longer term. I could see, you know, less dramatic, but still there was a divergence from this high as we came across here. Actually, that's not so bad. In the shorter term, it was here. Right? So, well, really, the takeaway here is that you want to look for the trends not only of price, but also of this RT, and is it hitting higher highs and higher lows? And those trends, you know, there's the long trend for GameStop, but there's also the shorter trend for GameStop. And so it's helpful to look at those in different time frames.
All right, next up, we've got if a stock's VST is over 1.6, and currently I think the top VST stock in the stock viewer is like 1.5 something. Dominic wanted to know, if a VST is over 1.6, do you think that's too high to buy the stock?
Not at all. And let me answer the question this way. Let's do this. If I can figure out where I am. We'll just graph the top 10 here. So another way to restate that question is, I see, wow, your stock has been here. It's a top VST stock, but it's been a top VST stock for some time. Jazz Pharmaceuticals, great example, right? Here I'm looking at a one-year graph of Jazz. It's at the top of the list, and the user typically comes in here and says, wow, that's a beautiful graph, but man, I missed the move, right? That's kind of where we're going with that question. So if it's already at the top of the VST list, then I missed my opportunity. Well, if that's what you're thinking, then you have to say that you missed your opportunity here, and you missed it here, and you missed it here, and you missed it here, 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 and now you missed it again, right? So you've been missing opportunities for the past 9 months. So there's kind of two ways I'm going to answer the question. First of all, be careful of that assumption. I'm more worried about parabolic moves in price action that are unsustainable. You know, once this graph gets more than a 45-degree slope, that's when it's becoming unsustainable. But I need to know what's going on with earnings, because earnings is driving that future valuation. Now that you see earnings, it's actually fallen off here in the last week. We use forecasted earnings are incorporated into this earnings number. So they've been tailing off here a little bit, but that's ultimately, you know, that's been a nice supportive earnings pattern supporting that price move. And so the question is, if you have this earnings pattern driving that valuation, what's to stop that upward price movement? Right? Who wants to get out of that stock? Well, the answer is no one, really. Right? There's no rush to sell here because they're improving their valuation because they're earning money. And so their stock price should follow. Of course, sometimes the market gets overly enthusiastic, and maybe you want to hold off until it corrects a little bit. The follow-up, the second way I would answer that question is one that says, okay, well, I can help you find these stocks when they first started coming up to the top of the list. And let's look. I'm going to graph. Whoops. Maybe I am. Any indicator in the VectorVest system can be graphed, right? And so I might say, well, okay, let's look at when this first crossed above, say, 1.4, right? As that was a level, or pick your poison, crossed above 1.2 as a great time to enter. Should be about there, I guess, right? That the stock is just now moving up into the top of that list, right? So there are a couple different ways to approach that question, but ultimately, this is a momentum play, and I'm not afraid of stock at all. It's in a nice uptrend. In fact, that's what I'm favoring, as long as that uptrend is driven by fundamentals, in particular earnings. But that earnings engine is going to drive that future valuation, and that's why we want you to favor stocks that have, boom, this nice correlation, smooth price pattern, smooth earnings pattern. It's a great way, especially if you're a new trader. It's a great way to start. You don't get a lot of sudden surprises typically. Of course, it's the market, so all rules are there to be broken, but hopefully that's helpful.
All right, one more, and then I'll take a look and see what's been coming in recently. Going back to your graph of Walter Energy. I don't know if you still got that up there, Todd.
I don't, but I know how to get there.
I believe you had...
I'm trying to remember what the symbol was. Walter Energy, WLT. Boom. Okay.
All right. Looks like Bill had wrote in, Walter Energy, why would you wait and sell if it dropped below that stop loss line you put in? And then he goes on to say, with all the information VectorVest can show us, why even deal with this or any other loser? Get out and put your money to work in a much better stock.
I don't necessarily disagree with that at all. In this particular case, I'm saying, well, gee, okay, I'm in this, right? And I just had the VectorVest seminar with Todd yesterday, and I'm looking at my portfolio and I'm going, wow, I'm in Walter Energy. So what should I do with this guy? Well, it depends on how much you want to discount this uptrend, I suppose, ultimately, right? But I'm not about churning and actualizing losses if I can avoid it. The loss is actually here. You may be right. If I could recapitalize by selling Walter Energy and putting it into somebody who's running much farther, much faster, that would be a better use of my capital. But at the same time, if I liked Walter Energy, and let's take a look at the VectorVest simple layout. Right, they are improving their earnings, or have been recently, although it's tailing off again. Right, so if I start looking at saying, well, there is some reason for a positive expectation that Walter Energy will start trending upward again, and then I can catch that ride and get the benefit of the gain from where I am currently, then I would stick with it. Otherwise, you may decide that, just I'll take the bounce, move on, recapitalize, and get something that's much stronger. Those would both be viable in my mind. I guess the only cautionary thing that I don't like is, let's say you open that portfolio and half the portfolio has RT scores below 1. I don't want to go out and just churn the portfolio for the sake of churning the portfolio, adding up all those commission costs, and potentially kind of just trading willy-nilly. If I can repair or heal my portfolio pragmatically, step by step, by weeding the hopeless stocks out, and then I can evolve into a stronger portfolio as time goes. Walter Energy is either going to go up or it's going to go sideways or down. So if it goes down, then I'm out.
You back to me?
Somewhere in here, I have to stop here. There we are. I'm back to you, Brian.
All right. Well, since it's 5:30 now, there were a few questions we didn't get to. I'm going to give our phone number here. There's a bunch of things people ask that are great questions, and we will cover in future lessons. But things like, can I add columns to a portfolio and look at like RV, RS, and RT in my portfolio? Yes, you could do that. There's searches that look for VST and earnings per share, and you could do that in a search. Some people want to know how to look at ETFs. We have ETF viewers in there, and you can analyze ETFs that way. So there's a lot of things that are in there. Those are all some quick things that our consultants can help you with. You can give us a call. I'm going to put our phone number in the chat box here. It's 888-658-7638. I'm sure it's probably on a slide somewhere. Oh, we didn't put it on that slide, but there it is. It's 888-658-7638. Give us a call. We're here to help you out. And I'm going to turn it back over to Todd, but it was a pleasure moderating for you today. And I'm going to move it back over to Todd so he can say his last goodbye there.
Thank you, Brian. Yeah, folks, this is a first look, a first step into what is a very comprehensive tool. I haven't seen anything like this in the marketplace, and it's my job to look for it. So, yeah, this is only the first bite. Typically, my answer is, if you have a question, the answer is yes, we can do it. Obviously, there are going to be exceptions to that, but use the folks in product support to help us get on the right foot. We have this university link here on this slide. In the VectorVest University, we have not only training videos for each of the tabs in the software, but also strategy of the week presentations where we can give you ideas, food for thought, if you will, on how to use the program more effectively. If you're just starting on the program, well, let's keep it simple. Let's step through it, step at a time here. Get your fundamental understanding of the program and how it works so you can be more effective before we outrun our coverage, if you will. To that end, I thank you all for coming to this first step, because it is, I think, the best way to get into the VectorVest system, because nobody likes to lose and make mistakes. So I applaud you for coming to this. Look for our next lesson 2 coming up soon. And again, thank you. Have a great evening.